Cummins, stock ticker CMI, is a well-respected OEM known for its high-performing engines and diversified product offerings. Company has recently separated its filtration business and launched a power business, Accelera Energy Technology, and the analysts expect the management to focus on product enhancement, growth, and increasing dividend, and the analysts think that the stock has a very positive outlook. Obviously, we want to take a close look ourselves, calculate intrinsic value, and look at some of the fundamentals. So taking a closer look here, you can see Cummins currently trades at $215. Year to date, down roughly 10%. If you zoom out a little bit over 1 year, down 11.5%. Comparing that to the S&P 500, you can see here, while the S&P 500 is up 10% year to date, CMI, as mentioned, down 10%. It offers a quite nice dividend, as you can see, a 3.11 with an annual payout ratio of $6.72. Payout ratio sits at 33%. But if you take a closer look here, you can see that is actually based off the EPS. So that is something we want to take a closer look at because we do want free cash flow to actually pay the dividend and not just based on earnings or debt. The 5-year growth rate sits at just shy of 8%, dividend growth of 17 years, and I do believe this should actually be 18 years because they recently raised the dividend by 7%, making it 18 years of consecutive dividend growth. Jumping in here to the history chart, you can see up and to the right, just as we want to see it, 33 years of consecutive years of payment. And as mentioned just before, I think this should be 18, so 18 years of dividend growth on top of it. We do, however, want to take a close look at some of the numbers behind, and jumping into the income statement, you can see what we first want to take a look at is the revenue. Is it growing? And as we can see, back 5 years ago, December 2018, 23 billion up to around 32 billion in the last 12 months. So indeed, they are growing their revenue. Coming down to the net income, you can also see started at 2.1 billion a couple of years ago, now up to 2.5. Not the biggest growth at all, but still some growth at least. I know there's a lot of turmoil in the world also at the current time, so obviously there's a lot of factors in play here. If we jump into the cash flow statement, you can see here what we want to see is how much free cash flow is Cummins actually producing. Coming down to the cash from operations minus capital expenditures, you can see they are roughly generating 1.1 billion of free cash flow. And if we compare that to the last couple of years, you can see 2.3, 3.1, and so on. So the cash from operations has actually decreased quite a bit, while the capital expenditures has been steadily on the rise ever since 5 years ago. Coming down here to the bottom, you can actually see how much free cash flow per share is being produced. Right now, for the last 12 months, it's 7.76. Comparing that to the dividend stats you saw earlier with the dividend being 6.72, you can see it's actually getting dangerously close. So that is why a payout ratio based on earnings can be deceiving. So I always want to take a close look at how the free cash flow looks per share and in general to gauge whether or not the dividend could be sustainable in the future. But one thing that is also nice to look at here is the total shares out on filing date. As you can see here, back in 2018, 157, now it's down to 141. So they are actually buying shares back pretty aggressively. So in the future, I think they will be quite fine because buying back shares actually means they have less shares to pay dividends to. And within the same amount of free cash flow, then you need to pay a smaller amount basically overall. So there's plenty of room, I think, to grow the dividend in the future. Before we jump into the intrinsic value, I do want to take a closer look at how the analyst from Wall Street thinks about Cummins. As you can see here, they have it rated as a buy, dangerously close to being a hold. And if we look on the breakdown over on the right here, you can see 21 analysts, 6 has as a strong buy, 14 as a hold, and on single person on the sell side. So in my eyes, looking more and more as a hold. Coming down here to the price target, you can see the average price target is 255, indicating a roughly 18% upside from the current levels. With the actual price of Cummins at the time of recording at 216, it could indicate the analyst thinks that this is the bottom and there is a pretty nice upside to be had from Cummins. Obviously, we do want to take a close look at that ourselves. Jumping into our stock screener, zooming a little bit so you can see everything a little bit better. You can see here the PE ratio sits at 11 compared to the 5-year average of 14. Could indicate a pretty decent time to actually buy it. We are getting relatively close to the 52-week low, at least pretty far away from the 52-week high. Net debt to EBITDA is 1.91, not alarming at all. As you know, I would like this to be under a 3x ratio. Return on invested capital and return on equity are also looking pretty good. The return on invested capital is a bit low compared to the 5-year average, but still is looking pretty okay. I think they will bounce back quite nicely. Gross margins and everything is looking really good. I don't like the operating margin not grown over the last 5 years, but again, it's a very small amount they had to. So maybe they had to swallow some of the inflation or something. That is something you definitely need to look into. Jumping into the dividend data tab, zooming in a little bit more so we can see everything a little bit better. You can see what we actually want to take a closer look at here, or what we want to see is some steady growth. And you can see here there are a lot of similar numbers over the last couple of years from Cummins in the dividend growth rate. Sits around this 7, 6, almost 8%. The dividend growth rate over the last 10 years is over 11, which is pretty high. But if you take a look at some of the earlier years, you can see here they have raised it by 25 and so on. So that obviously skews the growth rate a bit higher than what it is. I think if they can keep this 7.5 dividend growth rate up, that would be very nice coming into the future. Coming down here to the dividend growth rate chart, you can see what we want to take a closer look here is if it goes above the line into the blue area, it could indicate a potential undervalue. Right around now, roughly 9%, at least according to the dividend yield theory. And whenever we move down into the red, it could indicate that the stock is overvalued. But to support this, we obviously have a lot of different valuation models, such as discount cash flow model, the dividend discount, multiples valuation, Graham's revised valuation, the PE model, free cash flow valuation, and the Peter Lynch model, and so on. If you want to take a closer look, then pause the video at any time of them and to take a closer look at some of the detail if you want. Before we jump into a summary, thank you so much for watching. If you haven't done so already, please subscribe to the channel and like the video for more videos into the future. Now, let's jump into a summary where we take a closer look at our valuation methods. As you can see, I have excluded the multiples valuation, and it's based on there was only a single competitor or peer that has a positive EPS. So I did exclude that one. So we do have the remaining ones. Averaging all those together gives us an average intrinsic value of $218. With the current price being around $215, $216, it could indicate that Cummins right now is pretty fairly valued. We do, however, as value investors want to have a margin of safety, and for that we have our margin of safety calculator over here on the right. We start with a standard of 25, then depending on some of the key metrics such as the EPS growth and so on, we either add or deduct a little bit margin of safety. Doing all this, we end with a margin of safety of 10%. Plugging that in over here on the left, we do get an acceptable buy price of $196. That is if you want to have at least that margin of safety extra, because we do make some estimates based on our valuation. So just to be on the safe side, we do want a little bit extra margin of safety compare of some of the estimates that we have already done. Personally, I think it's a quality stock with a pretty fair value, so I personally wouldn't mind nibbling at the current levels. I obviously would like to have it a little bit pull back more, and I think the general market could probably pull it back lower from the current levels. If you don't mind dollar cost averaging into it, I think it would be perfectly fine to start now. Don't go all in and then just nibble a little bit on the way down and then again on the way back up. Looking into the future, I think Cummins has made some very nice strategy, and I think they are well positioned to actually execute on that strategy and move up some of their segments into the future, so not just so dependent on engines and so on. So I think they'll be a very nice company with a very nice strategy and position coming into the future. So again, at this level, I would probably starting to nibble myself. Thank you so much for watching, and I'll be seeing you in the next video.